Welcome to Commercial Property Talk, the podcast where we explore the trends, challenges, and technologies shaping the world of commercial real estate. Today, we're heading to Canberra, and I'm joined by Brett Barton, principal and founder of Barton Property. Brett is a third-generation real estate professional with deep roots in the industry, and he's built a strong reputation in the Canberra market across sales and leasing. Through Barton Property, he and his team specialise in helping businesses, investors, and owners navigate what is a very unique market, one that's heavily influenced by government, infrastructure, and long-term planning. Let's get into it. Brett, thanks for being here today.
It's a pleasure, Gary.
So let's start at the beginning. What got you into commercial property and how did Barton Property come about?
Gary, I was basically born into real estate. My grandfather started a real estate business in a town called Young in New South Wales in 1938, and it was a stock and station agency business. And he actually sold the business in 1959, and my father then was about 16, but he actually worked for that particular company he sold it to for 1 year. Then he opened his own real estate agency and called it John R. Barton Real Estate. And basically, all my life, I was basically involved in real estate, going to school and helping out. When I was 12, 13, I used to work in my father's business and help collect particular payments of rentals and things like that. So I always knew that I was going to get into real estate. So my objective was to finish school at 18. Canberra was obviously a national capital. It was 2 hours from Young. I decided to take the actual choice to drive to Canberra and get a job in Canberra for 2 years, and with my view to move back to Young. So got in my car, drove down, didn't know where I was going to actually apply for a job in real estate, but I just got out of the car and door knocked. And I door knocked on LJ Hooker Canberra, which was a large commercial real estate business then. And I said, any opportunity for a job? So they interviewed me that day, and they made a job up for me saying, listen, we're looking for a commercial rent collector. And I said, oh my gosh. Anyway, I took the job on. They gave me a company car during the day. And my job was to actually collect, back then, in 1985, there's basically, it just had taxes and, no periodic, they did have periodic payments. Everybody paid by check. So I used to go around and collect about 1,400 checks between the 1st and the 10th of the month. I'd go flat out because the owners get paid on the 15th, and the ones which I couldn't get paid, I collected by the 30th. So I did that for about 12 to 14 months. And back then, the paperwork was all about, putting things down. So I ran a book and basically wrote down all the owners' names, mobile numbers, wrote down all the tenants' details, all the lease expiries. And I actually then convinced LJ Hooker to put me into sales when I was about 19 and a half. They were very hesitant because of my age. So I went into sales, and because I had a fantastic contact of all my landlords and all the tenants, I completely had a base to work on it. Within 6 months, I wrote about $350,000 worth of commission, and back then it was a lot of money. And all of a sudden, I was this new star on the block and sort of stirring up the other sales staff within LJ Hooker. But I got a phone call from person who just started Colliers, and Colliers was sort of, I didn't know much about Colliers, but Colliers started in Canberra. And they actually said, Brett, we're looking for someone to join to start the industrial part of the business up. So I went across now to India, and I actually said, I'm happy to join, but only on the basis I have equity, because the new business was a franchise back then, Colliers. So when I was 20, I agreed to buy into the business and have 20% equity in Colliers Canberra, and there was 5 of us there. Well, each had 20% each. From then on, we just grew that particular business in Canberra. I worked all industrial, and about 3 or 4 years down the track, we merged to become Colliers Australia-wide, and I became a partner of Colliers Australia-wide as director, but I was basically the youngest director, age of 21, of a large corporate firm. Stayed there for 22 years. So, I was a bit chuffed about that, but it was all about, hard work and at that point in time and, just focusing on it. I didn't travel at all at a young age. I basically worked until I didn't really start traveling until I was about 38 days, to tell you the truth, just worked and worked. I basically ended the day, over those 22 years, Colliers was product line for industrial, and I actually did institutional sales, and I also did bulky goods leasing. And for the last 5 or 6 years of while I was at college, those 22 years, I was in charge of the office leasing,
Okay.
institutional office leasing, right? So I was leasing, and I actually really, did very well, met plenty of contacts, and it was remunerated very well because we sort of every year I sort of brokered 750,000 of fees each year through those average of those 20 years. So did well, but what actually happened, I got a bit sick of the corporate world in relation to getting things approved, things like that. And I was sort of getting involved in a bit of private development myself. So I thought, time to move on. I always wanted to go back to the roots of what I really enjoyed, which was industrial, because decision making was so much more easier, happened quickly, dealing with people which were down a level where I really enjoyed. So I resigned from colliers, gave them 6 months' notice, and told them what I was doing, and they actually quite good. Said, "No, stay on for 6 months. I understand you want to open an industrial business, but we don't mind." So I left and opened industrial business in 2010.
Okay. Yep.
It's called Commercial Property. It's now been going for 16 years, and we specialise in industrial. Got a team of 8 very big industrial management portfolio of 4 property managers looking after that. And I've always been obviously focused on transactional focus. So I've got myself and my son Patrick Barton and my sister's nephew James Brown doing sales and leasing in commercial, industrial. Basically, we're the only firm which specialises really industrial in Canberra. We don't have a lot of other product lines, but I've actually have introduced plant and equipment into the business the last 6 months, and a rural division because of some synergies in relation to our contacts in the rural side of our clients.
Great.
So that's
Great.
the way it
Yeah.
is. With Barton Commercial Property, we're probably recognised as probably the leading industrial business in Canberra. If you look at our marketing side and our competitors, we've got a very sort of good reputation.
It obviously runs in the family, so you've got that benefit as well as all the experience that you've acquired over the years. What do you enjoy most about working in the market?
I like it. It's different every day. I mean,
Yeah.
now, you wake up, the end of the day, you've got your diary, but the diary actually doesn't necessarily go the way you thought it was going to go when you turn up to work. And each particular deal is a little bit different. I mean, you're dealing with so there's a lot of variety. At the end of the day, you're out and about. You're not necessarily in the office all the time, but it's you're evaluating in the industrial space. I mean, you've got a happy vendor, but you also see the happy retailer or end user, the tenant or the purchaser as well. So it's very rewarding. You know what I mean? And it's an
Yeah.
exciting. It's an exciting industry because it's different. Every deal's different. And I mean, in 42 years, I still have the actual urge that I want to um, get up and go to work, which is the thing which you need to do. If you don't enjoy what you do, you finish it. I've still got that bug.
Yeah, well, it's the most important thing, isn't it? That given the amount of time we spend working, was it your intention always to have an established Barton property as a family business with a lot of family connections in it?
I have to admit, yes, it was always in the back of my mind. The actual my corporate lifestyle just sort of occurred. It was just sort of how it eventuated. But we focus on in our marketing. I've got 4 generations in the business. I've got a mural wall in our actual office, which actually has got a full history of from 1938 right through to basically today. And I've got so I really focus on the family for generation and just a very personal service business. And my staff, we treat as family as well. Um, as if they're owners in the business. We just really look after them.
But you're based in Canberra. How is the commercial property scene there different from other cities around Australia?
Well, obviously, we're very much underpinned by the government.
Yeah.
We're probably 55% of the employment in ACT is Commonwealth or ACT government employment. So we're very lucky in that instance. We're very protected in relation to spending in relation to the Canberra economy. The other for sort of 45% is private, and we're very big private. We have over 10,000 probably transit people come into Canberra every week from Sydney to work in Canberra. And we've got a high income distribution because of the Commonwealth. I mean, the average income for two people, is probably 300,000, sounds, coming into a family. So
Mhm.
we're very much protected in that instance for spending. A lot of money stays in Canberra, particularly go out to other regions, and a lot of people shop in Canberra. And you got the Commonwealth, which is really, end of the day, is the underpin of how Canberra performs.
And do you find that government tenants sort of tend to favour certain precincts or building types in Canberra? Do they have specific requirements that you see that are quite different to the private sector that you deal with as well?
Well, we've actually got basically um, four major town centres, and
Mhm.
also you got a parliamentary triangle. And there are certain departments who have actually homed themselves in each town centre. You talk the Canberra CBD has a office space of around about 650, 700,000. It's got about five or six uh, um, departments. And then you've got Barton, which has an office space of roughly about 700,000. It's got DFAT, and ATR have just announced to move there. Prime Minister and Cabinet, you've got a lot of them. Then you go into Belconnen, got Department of Immigration based there, and you go out to Tuggeranong, you have Service Australia, which is the Centrelink part of the Commonwealth. They're based there. You've got Defence in Russell. So it's all spread out, but you've got these government departments which are big in certain areas, and they seem to stay there, but they do relocate occasionally. You've got the airport, which has taken some of the precinct, but they usually do base in certain precincts, but they occasionally do move. ATR have just announced moving the city to Barton in 2 years' time, so it just comes down to when that occurs.
Obviously, government tenants would usually mean longer leases and therefore more reliable income. How does that change the way investors look at Canberra assets? Would they typically see it as a safer bet?
And the government long-term leases, in the end of the day, and they're very popular in relation to institutional buying. And obviously, I mean, they're looking at also not only in the actual long-term lease, the actual building itself in relation to the neighbours' ratings and where it sits in relation to any capital expenditures and things on it. A lot of the old style office buildings, finding it hard to backfill, which government
Uh-huh.
used to be in, and most of the big government departments now have really moved into new buildings over the last 5 or 6 years, and very committed to some now. The older buildings becoming isolated and becoming difficult to backfill because of the issues about the way the government works in relation to housing with working from home. So, but they're very popular in relation to institutional buying. I mean, yields have come out a bit. The office market is completely very much very soft. We're giving 20%, 25% incentives away now. Going back 6 or 7 years ago, you might get 5% incentive away, but now it's 20, 25%.
And are you finding that the private sector is growing sort of around the government hubs as well, or is that quite different?
Yeah, it's completely different. I'm sort of going back to pandemic with COVID. I mean, that really has changed the office market precinct as well
Okay.
in Canberra. Because now there's a policy with public service that they can work home 3 days a week and come to work 2 days, and some are staying home 4 days and coming one day. And it's really changed the demographics, the way office space works in Canberra, and also the actual, it used to work on a ratio of 8 to 12 square metres, well, probably about 12 square metres per person in public service. Now they actually sort of hot desk and share, and there's not as many people in the building at once. It's completely changed the whole way people think in relation to office space now,
Yeah.
since COVID. So to answer your question, the actual private enterprise is probably in its own different area and precinct, but does rely heavily on the public service coming to the shop and within their premises.
What sort of changes have you seen in the industrial sector since you started? Barton property?
Well, the reason I started Barton Property is I mentioned because I really like the actual industrial side of things and the quick decision making. And I found that our competitors didn't really specialise in that area, and then most people wanted to work in the upper end because of the way the market fees work. But we've got a very parochial market in Canberra where a lot of people who made money started in industrial, and we've had steady rental growth in industrial. Didn't sort of necessarily go rapidly hard until probably the last 8 years. In the last 8 years, rents have probably doubled, tripled, land prices have tripled, and all that is caused through lack of supply of land because we're very much government, we're a town planned city. So you just can't go and buy a block of land off someone. It's all been released by government and you have to develop on it. So we really have relied heavily on a supply chain of land being released by ACT government, and they've been very slow on that take up. They have done some releases, and there's been some developers have come in and done some englobo subdivision stuff to sort of help that supply chain.
Yeah.
So the industrial is very buoyant because of the lack of supply.
And what do you sort of see as the future for industrial in Canberra? Are you seeing sort of an increase in growth with things like online retailers? Like, who are some of the names that you're typically dealing with at the moment?
Well, we've got all major national brands actually in Canberra. And as I mentioned, a lot of money stays in Canberra because of that. We don't sort of, go to Sydney to shop. But prior to that, we used to. The internet certainly is affecting, I think, the local trader who has not got a national brand in the bulky goods and good retailing. I mean, the ones which are surviving long term now, good retailers, obviously branded companies because of obviously the internet, but yeah,
Yeah.
the local provider, it's all coming down to the personal service, and pushing that through. We're very much a car-driven city, so most people drive out to the industrial suburbs and shop, and like that particular service. You know what I mean? And
Yeah.
if you're offering that particular service in your local business outside your branding, and that they do perform quite well.
So you mentioned personal service, because I just want to bring that back to some of the things you were saying earlier with the way you've built your brand. Do you find, or let's just say, when a deal gets tricky or high pressure, what do you think clients value most about having your team alongside them compared to some of the other competitors or corporates in the market?
Well, I mean, I think if someone says no or we can't do the deal, because there's always an angle to look to try to close it. You know what I mean? In an instance, listen, I've always said to my staff, be honest, tell the truth, work hard. It is what it is, right? Don't bullshit around the particular deal. You really just need to tell the facts and say, listen, guys, it is what it is. You either want to do it or not. If it comes down to a funding issue because of banks, it's always difficult. If it comes down to an incentive issue, we need to trigger the incentive or whatever, you know what I mean? As long as you keep an intrinsic value of the asset up, and you know how the landlord works in relation to is not highly geared or things like that.
Mhm.
It's a good tenant. There are ways to try to close the deals. I mean, I'm very much to start having issues and closing the deals. I sort of try to get in and offer that sort of service. How can we do it? But in some instances, you can't make it happen because it just comes down to a funding issue or the stock from overseas has been stored because it's been on the docks or things like that. So things out of your control, you can't help. But in instances, you can usually work out a way to close the deal.
Yeah, absolutely. What's a mistake you see people make too often in this market? And where do you think Canberra's heading over the next few years?
I mean, I think what's Canberra's going to have a steady growth in relation to commercial property, industrial wise, and we're at a very high rental base now. We're basically talking, 250 to 260 a square meter brand new warehouse rents, industrial. That's high, right? Yeah. That land go from 450 to $1,000 a square meter. Build cost to 2,000 a square meter. So your developer's profit is really not there anymore. it might be 5 to 10%. It used to be 30%, but now you're really just buying a cash yield and hoping the depression of the yield coming down, you're going to make your money. So I see, because of that, I see it to steady growth.
Yeah.
I can't see a lot of money and be made out of commercial, except you're happy with the income stream. And, the way the economy is with interest rates now, yields are probably going up slightly due to borrowing issues, but all comes down to supply. We haven't got a lot of supply as well, so there's not a lot of choice. Yields probably will still be a bit tight because of that, but I don't think it'd be a lot of massive amount of upside over the next 3 to 4 years.
Right, at the very start, you gave an overview of your background and mentioned the family connection to real estate and all the experience that you've gained um, working in the corporate sector, building your own business. If you weren't in property, what do you think you'd be doing?
If I was in property, I'd probably be funds management, stockbroking, to tell you the truth.
Okay.
Yeah, I was quickly found out when I was 17, I wasn't going to be a tennis champion. So I probably would have been in stockbroking, funds management. You know what I mean?
Okay. Why is that?
And it's something which is actually sort of transactional focused, dealing with things. It's world economy. I mean, I do like the economy side of things and seeing cycles. I've dabbled a little bit in the stock market, but I actually find just dealing and assisting and helping people grow their wealth, that is just another angle. Working in an office all day long probably wouldn't necessarily be my favourite thing, but yeah, something like that. But I mean, end of the day, it's a difficult question to ask because I've always sort of never had any other views besides real estate.
Yeah.
You know what I mean? And I'm a firm believer too. Is that in my industry, it's the old-fashioned rules. You know what I mean? I make sure my staff. I work on the old-fashioned foundation of real estate in relation to, forget about having a phone. It's all about door knocking and account management and getting to know your clients, your products, and, I mean, really working the old fundamentals and then add the new technology to that. You know what I mean? It's just don't be the lazy salesman. It's really, end of the day, getting out there and being really personal with your clients and targeting the right particular opportunities.
And what are the plans for the business next then? Because you mentioned that your son's obviously working there. Is the intention that he'll then take over the reins in the long term?
Well, I'm 60, and I don't think I'll ever actually leave the actual industry. End of the day, I mean, your brain needs to be keep focused on. I think that's the reason why you stay alive these days. But change of lifestyle for sure allows me to actually go and do things. Why Patrick will be sort of one of the main leaders of the business, but I've got other people in here, James, and I've got a very good management team as well. And so there's opportunity for everybody to be involved in it. But yes, Patrick would be the front runner at this stage, and we're developing that and talking that now as a plan that I take a CEO role back in the business, and he takes on the actual on the um, on the senior role. But that is a gradual procedure over the next sort of 6 to 12 months.
Brett Barton, thanks for your time. It's been great having you with us.
It's a pleasure. Thank you.
To our listeners, thank you for tuning in to Commercial Property Talk. If you enjoyed this episode, don't forget to subscribe for more conversations with leaders across commercial real estate. I'm Gary Clark. See you next time.